This is part 2 of the final exam review for Business 150. We're going to start with Chapter 12, Creating and Pricing Products that Satisfy Customers. This chapter starts with the classification that we talked about in Part 1. The difference between business-to-business products and consumer products. Business products are purchased for resale to become part of another product or to aid business operations. Consumer products are purchased for personal consumption or consumption by someone in your household. That's the first thing. The next big idea from this chapter is the product life cycle. Right. Products go through introduction, growth, maturity, and finally decline. You should also be able to distinguish between what we mean by a product line and a product mix. Now, you don't have to memorize the stages, but you should be able to recognize the stages in developing new products. Idea generation, screening, concept testing, business analysis, product development, test marketing, and finally, commercialization. You should know what a brand is. You should also know what is price. Often we confuse cost and price. Price is what customers are willing to exchange for the product. You need to be familiar with the 3 different pricing methods: cost-based pricing, demand-based pricing, and competition-based pricing. See if there's anything else. Actually, that pretty much is the end of what I need you to know from Chapter 12. Chapter 13 is also a fairly short chapter, distributing and promoting products. Well, first, you need to know what is a marketing channel and what are marketing channel members, who are also called marketing intermediaries. Now, a marketing channel, the longest one, would consist of from producer to agent or broker to wholesaler to retailer to the customer or consumer. A direct channel is one that goes directly from producer to consumer. You should be familiar with each of those channels and what each marketing intermediary brings to the table. What do wholesalers do? Well, first they have warehouses. They actually do take possession of the product. They have trucks and warehouses, and they help with transportation. Retailers, and there's many different types. You want to be at least familiar with them. Retailers make it easy for the consumer. If you go to a retailer, it's probably well lit, attractive with a parking lot. That's part of the value that they bring, in addition to having a diverse number of products. Let's see, what else do we need to know from this chapter? Oh yeah, the promotional mix. As I mentioned in Part 1, the marketing mix is product, price, place, or distribution, and promotion. Well, promotion has its own mix: advertising, personal selling, sales promotions, and public relations or publicity. You need to know what advertising is and the advantages and disadvantages. Basically, it is one way, one-to-many, paid non-personal communication through mass media. You need to know what personal selling is, and that it's usually used in business products because it's expensive. But it's a great way to sell because it is personal, uh, i.e., a sales representative will come out and make a sales presentation. And because it's personal, they can counter objections and answer questions. Sales promotions, incentives to get you to buy now. Those include discounts, premiums, rebates, coupons, etc. You should be familiar with those. Public relations, simply an attempt to garner a favorable public image. So you need to know each of those. And first you should be able to define them and know what's good and bad about each. Chapter 15 is the last chapter represented on your exam. And it's called Management and Accounting Information. First, you need to know what is a Management Information System, MIS. It's simply a system that helps to gather information. And what you're going to find is that information is a resource. Hence, you need to know the difference between data and information. Right. Information is actually data that has been organized to inform. Management Information System, a system that provides managers' employees with the information they need to perform their jobs as effectively as possible. Most management information systems include a computer system, but don't be confused. The computer system itself is not the MIS. It's merely a major part of it. You need to know what is accounting and the major distinction. The major distinction is between managerial accounting, which reports financial information to those inside the firm, like managers, so they can make better decisions, and financial accounting, which reports information to people outside the firm, like stockholders, potential stockholders, the government, etc. Now, there are a couple of vocabulary words that are important from this chapter. GAAP, Generally Accepted Accounting Principles. CPA, a certified public accountant. You should know that there are requirements to become a certified public accountant. You have to qualify first and then take an extensive exam in most states. Another term you need to be familiar with is depreciation. Depreciation is a method accountants use to value an asset. The next thing that we're going to talk about here is the accounting equation. Assets equals liabilities plus owner's equity. Assets are any machinery, equipment, building, etc. Anything of value owned by the company. Liabilities are anything owed by the company. And owner's equity is the money that the owners put in to start. But the other thing is owner's equity will generally be equal to a corporation's, the difference between assets and liability should be owner's equity. That should also be the value of the common stock. You need to know the accounting statements and what they show. The balance sheet, which is sometimes referred to a snapshot of a firm's financial condition, because it shows where the firm is today. Balance sheets will have the date on it, and that's what it shows, the condition on that day. The income statement is similar in some ways. It shows the financial condition, but over a period of time. And the period of time will also be shown at the top of the statement. The statement of cash flow, or cash flow statement, tracks cash in your organization. What you're going to find is that cash and liquid assets are important, especially around payday. Now, another term that I forgot to mention, but statement of cash flow, you should be familiar with the term liquidity, or a liquid asset. Liquidity is the ability of an asset to be turned into cash. Your most liquid asset is cash. Pretty much, that concludes my review. The exam is 90 minutes. Answer the best, choose the best answer, trust yourself, and good luck.